trading hour of the trading session for the week gone by, and it's been a good week for the bulls because the Nifty has managed to eke out a gain of around 2.5%, and we're ending towards the highest point. At least that is what it looks like right now, 24,100 at the index level. Of course, a fresh record high on the Nifty. The Midcap index too managed to scale a fresh record high today. The small cap index too sitting in the green. What's only underperforming today is the bank Nifty. So private banks are coming a bit under pressure. Your HDFC, ICICI, Axis of the world. That's the reason bank Nifty is in the red right now. But other than that, there are a lot of pockets of green. Starting with Reliance itself, which has managed to actually eke out a gain of almost 3%, has managed to hit the market capitalization of 21 lakh crore, the biggest that is there in India right now. That's doing quite well for the bulls right now, and in fact the entire energy pack at that. So whether it's an MGL, an IGL, even ONGC for that matter, some of these gas and energy plays are definitely on the front foot today. We're also watching out for some of the PSU banking names. So SBI will come up on the screen. That stock is high by 1.5%. Tata Motors is doing well in the trading session, so a lot of spots of green right now. Telecom had a positive tailwind of tariff hike, but there is a sell-on news which is actually played out. So you have the Bharti Airtels and the Vodafones of the world, which are actually in the red right now. Lots really to watch out for over the weekend as well, and I'm not just talking about the cricket match which is lined up, and I'm sure on Sunday all eyes will be around that. But tomorrow perhaps there's an important meeting lined up at the North Block as well, and the fact that we'll have to deal with the PCE data today evening, because for now we're not getting much cues from across the globe, but I think all eyes there will be on that personal consumption expenditure data. That will be key to track.
Oh yeah, absolutely. That's going to give some cue to the market in terms of, A, where the consumption is headed, and B, whether the, uptick in inflation is dampening sentiment or not at all. But for now, Star Health has been holding out well because, the analyst day takeaways went down well with the street. Let's bring up that stock price. It's been a very, very steady shape. In fact, pretty much around the highs of the day, another 5% dash on that stock. They're saying that for FY25, they expect the industry to grow at 15 to 17%, and Star is expiring to grow 1.1 to about 1.2x the industry rate, that of 15 to 17%. So that's definitely something that's, the street liked. Anisha just flagged off the entire telecom play. Most of those stocks are off from their day's highs, or opening highs, I should say, given that there was a sizable block deal on Bharti as well to begin trade with today. And then JSW Infra, which is looking at acquiring that 70% stake in Navkar Corp from promoters for an acquisition cost of a little over 95 odd crore rupees. So that's another stock which is in focus, actually both those names. Man Industries as well. And after that initiation by MK with the target price of 500, this is turning out to be quite the steady stock performer as well. So I guess more than the index, today is a lot more about individual stocks. Yes, the index is also holding out, and we're at that 24,200 mark, start of the new series. But a lot of individual names, Reliance, ONGC, Tata Motors, they are the ones which are supporting the index today. But Naresh, I guess it's a good start. Couldn't really complain.
Absolutely. So we get the heavyweights breaking out one by one. So we have Reliance Industries now breaking out above the 3020 mark and continuing to trend higher. The next one on the radar is HDFC Bank, which continues to knock at that 1700, 1720 mark. 1650, 1670 is the support for the stock. Once it crosses 1720, that could give a push to the indices. So the structure is positive. We are seeing good momentum rotation across the board one by one. So it started off with ICICI Bank breaking out. Then we saw a Kotak Bank making a recovery. Then we have Reliance today. So overall, the structure is positive. The breadth is also relatively better than what it was in the last 2-3 sessions.
Okay, point taken. So that's the view on Nifty right now. Okay, in the meantime, we also have, in terms of the other movers right now, a lot of stocks which are buzzing on account of news flow. CDSL, for instance, is up a good 17%. A bonus issue is likely to be announced on July 2nd, so that's what's got the street excited. A lot of these holding companies on the radar, so Chola Financial Holdings, Bombay Burma, these are the names which are higher. You also have CEAT, which has actually moved suddenly 10% higher. KPIT Tech is having a great day. Star Health on account of that analyst key takeaways, and KPIT Tech, and even Apollo Tyres for that matter, is in the green. Naresh, a quick word on some of these tire stocks, CEAT, Apollo Tyres, because the news regarding a price hike was something that was factored in yesterday, but the move is coming in today.
Yeah, so there has been a spike across the board for a price hike, but the correlation with rubber prices does not really augur well. So it could be a short-lived move because rubber prices have also gone up over the last few months. So at current levels, the risk reward is not great. If somebody still wants to look at it, the only stock which has not really gone up in the last two sessions massively is MRF. So that's the stock which can maybe play a catch up, go up towards 1,35,140 as such in the short term.
Okay, that's the take coming in on some of these buzzing stocks. Apollo Tyres, MGL, Bata, IGL, all of them holding out very, very smartly in trade. But Naresh, the two heavyweights, Reliance and ONGC, what do you see on the charts for both these names?
So Reliance looks very promising because it has broken out above those levels. And that is what I was expecting when we were taking it as a preemptive bet around this 2,900 mark. Now that 3,000 mark, which was hit 4 times before exit poll, also the stock was there. Back in February, March also it was there. So the last trading range was roughly say 250 points. So on 3,000, a minimum target price would be 3,250, 3,300 level. So that is where it should take a move towards. Same way, if you look at ONGC, the stock for the last almost 5 months has made multiple tops around 285. And it is still below the exit poll closing price of 285. So out there, once we cross 285, that is where the momentum shifts. And there have been 6 to 8 attempts around that area over the last 5 months. So as of today, the last 5-7 days, a downward take has been reversed on ONGC. But further momentum comes into the stock about 280, 285 levels. So watching out, if that breaks out, there could be a 10-15% upside whenever it does so.
That's a view on Reliance, ONGC, and a couple of these other stocks. But Rahul Shah also joins us from Motilal Oswal. Rahul, hi, good to be speaking with you. What do you make of the move today on the tyre stock, SIAT, as well as Apollo Tyres perked up right now? The news regarding price hike is something that the SIAT management had told us mid-month as well, that by the end of the month, they will be taking a price hike of 1 to 2%. And that's played out exactly how they said. What then is leading to this excitement in some of these prices, in some of these stock prices, I beg your pardon? Rahul, the question is for you on the tyre stocks. Okay, so he's not getting the audio right now and we'll try and patch in, but I'm just wondering, with these price hikes coming in of telecom, of even these tyre stocks and others as well, I think ultimately it's the consumers who are going to pay more and the inflation would be more because there's just a lot of chatter around it. And I think Abneesh from Nuvama was pointing out that this might actually dampen the mood as far as the rural recovery is concerned, because there's a lot of price hike coming in across the board. We'll have to see how it really plays out. But Naresh, any view on some of the consumption names, because they again have gone on the back foot, the likes of HUL, ITC, etc. Would you be a buyer or just stay away from some of these FMCG names for now?
So for now, it's a time to stay away because they've actually taken a hit from the very important resistance levels, some of them. So something like HUL 2700 was the top for the last almost 2 years. It went to those levels post the election bump up, and the stock has corrected, so does not look interesting. And the other names which look interesting have not corrected much. So something like a Marico, which went up from 520 to almost 660, has slowly drifted. So that could be interesting at 590 odd levels if it dips. Same is the case with the Dabur, which has moved up quite a bit, but a small correction. But if that comes to 575, 580, it would be interesting. So in terms of these names, I would go with Dabur and Marico on further declines of 3-4%.
Okay, Naresh, stay with us. We're going to take a very quick break on that note. When we come back, we'll try and connect with Rahul once again and get in some fundamental perspective on the markets. Back with closing trades right here in 18 hour. Looking quite okay after what looked like it's going to be a wobbly mid-session. Although actually, no, I spoke too soon, I think, because we flattened out from where we were just a few minutes back once again. But a lot of primary market action as well. And we spoke with Arun Gupta, the chairman and whole-time director, and Pranav Bansal, MD and CEO at Bansal Wire Industries. Here are a slice of our conversation with them.
You will see we are a growing company. Even in the last 10 years, we've been growing at about 18-20% for every year. There is no year in which we've not outgrown our last year's number. So we are in constant need of working capital and expansion money, and which is why the proceeds from this IPO is also going towards some repayment of debt and working capital requirement for our future requirements. क्योंकि हमारी I would say the industry is quite big today, being the second largest steel wire company in India. We still only have 6% market share. So we believe that we have a lot of room to grow even in the future. So we today have about 5 manufacturing facilities, 4 of which are running at very optimum utilization, all in Delhi NCR. And the 5th manufacturing facility is actually a facility that has just started this year, which is a Dadri facility, which is of course India's largest, but also one of the largest wire facility there is in Asia, with a capacity of 3.5 lakh tons every year. From the today 2.5 lakh tons, we have added this new plant of 3.5 lakh tons standalone, which has just started operations. I can't give you a specific number on this, but what I can say is, as a company, even if you see the last 10 years, we've grown at 18-20% every year. There is no year in which we have not outgrown our last year's number. And if you look at our industry, being the second largest steel wire company today, we still only have 6% market share. So I would say the industry is quite big and there are a lot of opportunities. And if you look at even India today, which is where majority of our revenue comes from, I mean, we believe that it will grow at a faster pace than what it has been over the last 5 years, especially as per CRISIL. And other than that, you know, about 11% of our sale also comes from exports, where 75% of our export is from Europe and US. So we see the future as you know, good for us, and this will reflect in the expansion of 3.5 lakh ton Dadri facility as well.
Okay, a lot of primary action. We of course got the MQ management as well, and the listing of today, the debutant today, Stanley, saw a good listing with a gain of almost 30%. But Naresh, I wanted your view regarding the auto sector. It's of course going to be in focus come Monday on account of the June data. What's your sense ahead of that? Would you be a buyer in any of these auto names, or just stay away for the data to be out?
So I would stay away for the data to be out, because a lot of these names have done really well over the last 3, 6, 12 months. So the risk reward is not great. So there could be a pause if any negative data comes. So I would avoid the whole space and not going short also, given the trend has been very strong over the last few months. Would prefer auto ancillaries on all dips rather than autos now.
Auto ancillaries versus pure play auto majors. In fact, let's quickly take it across to Shrishti as well before we go back to Rahul Shah and get in his analysis on the markets and autos, of course. Shrishti, tell us what is it that we can pencil in for the Motown sales?
Well, for the month of June, we are not expecting any great set of numbers across the segments. This month is expected to give us subdued set of numbers, because first up, there's been no push because of the marriage season, and secondly, because of the delayed monsoon, some of the segments did get an hit because of the heat waves as well, from the likes of two-wheeler segment as well as the tractor sales were not that favorable. But all in all, a decent month coming in, not major declines as well as what we are expecting. Firstly, let's have a look at the passenger vehicle segment here. In a single-digit decline on a month-on-month basis is what we are expecting. The leader could be Maruti Suzuki, wherein we are expecting a 7% decline on a month-on-month basis, while for Tata Motors we are expecting a decline of 2%, while for M&M Auto the sales is expected to be just flat. From the commercial vehicle segment, there could be some recovery or some jump on a month-on-month basis, because this time we are expecting that Eicher Motors VECV expected to record 4% growth, and from Tata Motors as well as Ashok Leyland we are expecting a jump of 7 to 12%. When it comes to the two-wheeler segment, the build-up was quite positive, that because of the monsoon there could be some growth in the numbers because of the sentimentally the news flow could be on the positive side, but because of the heat waves, the sales or the sales number actually got delayed a bit. From the likes of two-wheelers, Bajaj Auto, TVS, Eicher Motors expected to see a single-digit decline, while for Hero MotoCorp we are expecting a 15% decline on a month-on-month basis. Lastly, from the tractor division, a jump of a double digit is what we are expecting on a month-on-month basis, while in the upcoming months the tractor sales are expected to do well.
Okay, Rahul Shah as well joins in back on the show right now. Rahul, hi, can you hear us?
Yeah, hi, good afternoon.
Okay, great. Rahul, just wanted your sense on how is it that you're approaching autos right now ahead of the monthly sales data, because a large chunk of the rally seems to have played out beautifully in the month gone by.
So I think the June numbers could be a little bit subdued. I think most of the things, I think two, three reasons. So what we believe is, I think one is obviously the heat wave, due to which I think we expect that the N2 numbers to be flat on month. I don't think so anything major things happening in the two-wheeler space. In a passenger vehicles, looks like there will be a decline 10% to 12%. Well, and plus, obviously, we believe that even CV space and your tractor segment looks like to be a decline in between 18 to 20%. That is what we feel about it, and I feel that this is just was for this month. But I think what we believe is that the theme to be played is obviously the passenger vehicles. So we remain quite optimistic on the passenger vehicle play as a whole. So top bet in this space remains Maruti.
So that's the view coming in. June might be a bit soft, but nonetheless, there are other tailwinds to watch out for. But one of the tailwinds for the telecom sector, Rahul, has been that hike that has come through, right? Is today just a sell-on news, and then perhaps there could be the resumption of rally come Monday? Or do you think for now the best is baked in and perhaps it's best time to book out the profits?
So my sense, I think we've seen that I think Bharti as well as Reliance, I think Bharti has a spectacular run-up in last 1 year. If I look at it, one of the best performing stock in the Nifty universe as well. So we continue to remain bullish on the entire segment as a whole, and I think this is just the beginning. After a long time, I think we've seen that the tariff hikes have come place. So sense is, I think we might see continue to re-rate the sector. So we remain quite bullish on the stock, and I think way the stocks have performed, I think this will continue. Will be a continuation in that. So Airtel remains a top bet, followed by Reliance in that space.
In the meantime, Wockhardt is, of course, holding up smartly. The stock has surged up about 22% in the past 1 month as well. We will be cutting across to the conference call that they are hosting. But it seems that the street is extremely enthused about the drug test update. That's WCK 5222, which they're going to also announce. They've already mentioned that it's an investigational antibiotic which is under investigation to treat complicatory UTI infections. So that's one stock which is in focus, of course, this afternoon. In the meantime, there's Alembic Pharma as well. They've received a US FDA final approval for one of the capsules. So that's another stock which has also been holding out well for the better part of today's trade, but then it's softened from there and lying flat as we speak right now. Rahul, where within pharma are you scouting for opportunities?
So I think pharma is a space, I think we've seen a mixed bet in that space. I think in large cap space, I think Sun remains our top bet. So I think if we look at it post their numbers and the management guidance of single digit growth in current year, so post that we've seen a decent fall in the Sun Pharma post numbers. So my sense, I think overall the stock continues to remain strong in the specialty businesses and plus the oral businesses. So among the entire pharma play, I think risk versus reward and plus the valuation remains quite convincing in Sun. So I think Sun is one of our top bets in the entire pharma pack.
Taken. Naresh, I wanted your view regarding MGL and Star Health. For MGL, of course, Nuvama has come out with a fresh note. They have a buy stance on the stock. They are calling the July 5th release of the Bajaj Auto CNG bike as the big trigger. We'll just pull up those flashes for you on the screen because that's the stock we're talking about, MGL, wherein they have the target price of 1,503. They have a base case scenario that this bike could add almost 6% to the company's volume. And in a bull case scenario, this would mean that perhaps 10% more volumes can come if this bike does take off. Separately on Star Health, of course, there was the analyst meet that happened yesterday. They're envisaging a growth which is 1.1 to 1.2x of the industry average, a target of 2,500 crores with respect to profitability by FY28, and they're expecting to see quite an accelerated growth as far as FY28 is concerned. Naresh, on the charts, MGL and Star Health?
So starting with MGL, that's been the leader in the gas space because that's the stock which actually gave a breakout and sustained well after that breakout about 1,200. Then after that, for the last few months, it has been consolidating an exact double bottom around 1200, 1250. The recent highs were around 1550, 1580, which has been taken out today. So a clean breakout here. We are seeing a similar breakout happen in IGL as well as a Gujarat Gas or even a Petronet LNG. So seems gas is the next rotation. So out here, positive on the stock, expecting further up moves going forward. Star Health has been a stock which has been sideways and testing that 500 mark multiple times over the last 2.5 years. So for now, today, it's given the first indication of a trend change. The previous highs are around 560 to 580. If it can sustain above those levels, that would be a clean breakout. So for now, would wait for some more follow-up action over the next couple of sessions, because today is more an event-driven one-day action.
Right. Okay, that's a bunch of buzzing names which we're tracking right now. In fact, Nitish Mittal Sen from Nazara Technologies, which also is, by the way, a buzzing stock today. We spoke with him earlier today and he shared with us his outlook on the factors that are going to aid the revenue and profit going forward.
We expect that in FY25, the AdTech business will grow much faster, both in terms of revenues and profits, as compared to FY24. Also, the AdTech business has a lot of synergies with many of the other businesses of our company, which includes user acquisition for the games that we develop, monetization through advertising. So there are several other benefits also that are accruing to us. So overall, we are very positive about this business. And this year, we should at least grow by 30% in the AdTech business. So we are definitely looking at new acquisitions. As you know, the company has raised a good amount of capital. We raised 950 crores in the previous year.
Welcome back. Well, Wockhardt is logged in upper circuit on the prospects of the new drug that they're launching. My colleague caught up with the management. Listen into a slice of that conversation.
Zenic is a new antimicrobial product, basically. And it works on resistance microorganism. And it has a new class of antibiotic. And there is, in India, about 750,000 patient resistance cases are there. And it will work on those patients.
If you talk about the timeline, how much timeline is expected? How can we see this truck in the markets? When can we see this? When can we see this truck in markets?
In Indian market, one can see a drug in about less than a year's time.
In a year's time. And talking about the overseas, what is the market for this drug overseas? Are you partnering with anyone overseas?
See, in overseas, what we will be completing phase 3 clinical trial early next year. Okay. And by the time it is available in the US and other market, it will be 26. And we would like to out-license this product to one of the big global pharma for marketing in developed world.
So can you share the update regarding another antibiotic which you're working on, nafithromycin? So can you share some insights on that? What is your stance on that?
Midcaps, that is nafithromycin, is an oral drug. It is used in pneumonia cases where there is a very significant resistance, as high as 60% to existing product. And when it is oral drug don't work, people get hospitalized. And that is where our drug is very effective. It has 97% success rate. And it's just a 3-day treatment. And it is a single drug treatment versus multiple drug, even orally doctor uses today.
So you were talking about the unique feature, especially for the Zenic and breaking point especially, which is a historic event as you stated in the press conference. Can you please highlight some points on that?
See, recently there is an institute for every antibiotic, they give you a breaking point. So that doctors know and the hospital know when to use the antibiotic. Generally, always the higher the breaking point, it is good for the drug, and drug is far more effective. We have given Zenic a 64 breaking point for all the 10 resistant cases, severely resistant cases organism. And the history of antibiotic of our last 100 years, 250 have been discovered so far. No drug has achieved such a high breaking point. Means, in other words, it's a kind of a major event. Like when penicillin was discovered, 28, similarly Zenic is that kind of a drug which is now available. And I think all of us in India should be proud of that.
And what about the uses? How much of this drug has been used in India? Also, talking about side effects, are there any?
This has been used for compassionate use. 30 patients have been completely cured where all other antibiotics have failed. And it has been used from 7 days to 70 days safely. So there is absolutely no side effect.
Okay. Coming to your book, sir, talking about the borrowing numbers, how do you plan to reduce it and what's the status of the borrowing numbers on your books?
See, currently, if you remove our working capital, is about 400 crores. About 100 crores is due to be paid, which we will pay. And the QIP funds we have raised, partly we will use for NC R&D development and rest for commercial business purposes.
Okay. Moving forward, what are your specific launches? If you can talk about FY25, any specific launches, any unique strategies going forward?
We would be definitely launching McNav in FY25. And that is Zenex, that is 5222 will launch in 26 in India.
Okay, that's the management. Habil Khurakiwala from Wockhardt talking about the future vision of the country, the drug pipeline and more. But let's also take stock of what's been happening in trades so far. We've got Ansh highlighting all the volume buzzers.
CDSL will be the first stock in focus as the stock has given a breakout from its horizontal zone which has been intact from last 2 months, and this breakout has come from 2200 level. In addition to this, the stock has also touched record high level. Also, today's breakout is backed by very heavy volume of over 35 times its average trading volume of last 10 sessions. Apart from this, IGL will also be in focus as the stock has given a breakout from its cup and handle chart pattern. Also, the stock has touched 1 year high, giving a breakout from 7-session consolidation as well, with volume of over 4 times its average volume of last 10 sessions. Lastly, Mahanagar Gas will be in focus as the stock has given a breakout from its upward sloping resistance, actually upward sloping channel. Also, the stock has touched record high level as well, with heavy volume of 6 times its average trading of last 10 session, giving a good positivity to the stock. Now, apart from this breakout stocks, there are high chances of India Cement and Indus Stars getting into ban list for Monday. So keep an eye on the stocks.
Thanks so much, Ansh, for highlighting those. Chandan Taparia also joins us on the show. We'll discuss the technicals with him. And a lot of stocks which are buzzing around right now. You have IIFL Finance, which is close to the highest point of the trading session, 8% gain there. Earlier in the day, 361 was doing quite well. In fact, that stock had managed to gain over 20% in this week itself. You also have Amber Enterprises, Praj Industries, some of these big buzzes in the trading session. Just wanted to begin the conversation, Chandan, by highlighting a couple of these names: IIFL Finance, Praj, Amber. Would you be a buyer in any of these names?
Yeah, thanks for having me. So first I'll talk about the Praj. Technically, it has given a breakout from its pole and flag pattern after the consolidative move of last 9 days. We have seen a surge in the trading volume, and today I think volume is more than 40 lakhs, which clearly indicates that this breakout could lead the next leg of rally. So major trend is positive, and the recent consolidation breakout and could add the more flavor. So I believe one can buy with support of 710, expecting this rally to extend towards 770 kind of level in Praj. Talking about Amber, yes, we have seen a consolidation breakout. Major trend is positive. Momentum is clearly visible. So it has been making higher tops, higher bottom. So one can buy with support of 4400. We are expecting an upside move towards 4700 zone. So Praj Industry and Amber both are looking good. One can go for buying for BTST and positional both.
Right, okay, that's the take coming in on Praj Industries right now in trade. Mayuresh, hi, welcome on board. How's it that you're navigating through the market right now? Doing nothing or adding positions in the under-owned names?
Afternoon, Aisha. No, I think this is a market that you should be a part and parcel of. You can't avoid the momentum that the market is probably giving you. But yes, we are being a little bit more selective. So I think the pockets that we are probably looking at in terms of growth vectors would obviously be something to relate to the budget as well. And therefore, I think the budgetary announcements related to infra spend, manufacturing, defense, I think these are going to be the key sectoral and structural themes going forward. Having said that, a few of the sub-themes in terms of water and waste management, power ancillaries, they're also going to remain in focus. So I think domestic cyclicals are going to remain in focus with expectations of monsoons, which have started off. Consumption should also start picking up steam as we head into the second half of this financial year, and specifically rural consumption. And therefore, consumption, discretionary and durables both should probably have some element of uptake. So I think we remain optimistic on the market. Select domestic focused sectors is where our belief is that the earnings story and earnings growth should still continue remaining strong.
Coming in, a bit of a tumble for the markets right now actually. Let's pull up the intraday chart as to how it's really panning out, because the week has been rather good for the bulls, but now we are giving up some gains, so maybe just ahead of the weekend there's a bit of a cool off. Just wanted to run you through some of the highlights coming in from the Maharashtra budget as well. Quite a bit of push when it comes to the solar side of things. So 15,000 crore solar power project will be awarded as well. There's a push coming in for solar pumps as well. There's going to be a push for plantation of bamboo. The value that is given to some of the women is also going to be increased in terms of the DBT transfers. Health insurance cover has increased from 1,50,000 crore to 1,50,000 rupees per family to 5 lakh per family, and overall ambit of hospitals etc. has also been improved and increased. So some of these general insurance companies, health insurance companies will be in focus on account of that. Some of the solar pumps makers, the likes of Tata Power etc. are going to be in focus on account of the renewable bit. So a lot of important headlines from there as well. But in terms of the stock prices right now, it is more of the same, at least from the front, at least from the broader markets. So Sundaram Finance is perking up. Tube Investment is something which is in the green right now. But in the red is Kaplan Point. That's taken a knock. Canfin Homes is also coming under pressure. But coming back to the big boy Reliance, Naresh, what's the view on that one? That one was cruising with a gain of almost 3% quite nicely. It's given up its gain, now 2.5% higher, but still above 3,100. What's the next level to watch out for on Reliance Industries?
So if you look at it, last range for the stock was around 2,800 on the downside, 3,020 on the upside. So on the breakout, a minimum target upside would be 220 to 50 points. So that gives us a target price of 30 to 50 odd levels. So that would be the target for the near term, and 3,050 now becomes a buying zone. So any dips back to 3,050, 3,080 would be a buying zone, and would have a stop loss below 3,000 and expect a move towards 30 to 50, 3,300 and then maybe higher. So the trend has started, breakout is good. So remains a buy on dips from here on.
Okay, what's dragging in trade other than, of course, Bharti, which has given up all of its morning gains post the tariff hike, and then, of course, that block deal as well, which followed. But some of the private banking names, ICICI Bank is down 1.25%, Axis is down 1.25%, Kotak down 0.6%, and even HDFC Bank is seeing a decline of about almost 0.5% or so. Chandan, would you be a buyer on every dip in the private banking space?
So, we have seen a small profit booking decline in the Nifty Bank in last 2 days, but major trends remain intact. This momentum was driven by 3 key banks, including HDFC Bank, Axis, and ICICI Bank. So I believe that a small decline could be bought, because even after some correction, major trend could remain intact and will continue to be with buy on decline. So if I talk about HDFC Bank, here one can buy on a small decline with support of 1630. Overall, it can head towards 1740 level. I can also look at the other name, including ICICI Bank, where major trend is positive. Some profit booking decline is seen, which could be bought. 1170 is the major support. So if it declines by further few points, then with support of 1171 can accumulate for an upside move towards 1240 level. So HDFC Bank, ICICI Bank will be 2 names where we'll go for buy on decline for next leg of rally in the market.
So that's a view coming in on some of these banking names, but time now to put the spotlight on some of the railway and the capital good majors, and that's because my colleague is picking up that Railway Ministry is targeting to award the contract for covering around 36,000 kilometers of rail route network under the Kavach rail system in the next 5 years. My colleague Samir is joining us with the story. Samir, which are the likely beneficiaries in terms of the companies who can get these awards, and how big is the size of it?
Yes, definitely, because of the recent rail mishap that now Railways is planning to accelerate the implementation of the Kavach railway safety system, and for the same, Railways is now looking to engage more private players for rolling out the Kavach system. And in the same direction, 6 very prominent, very strong players, they have shown keen interest, which include the names like BHEL, Bharat Heavy Electricals Limited, Siemens, Keynes. These are a couple of names which have shown a keen interest for the Kavach railway system, and they are likely to be engaged by Railways very soon. So Railway plans to award the tender for Kavach this year around 3,000 kilometers, next year another 3,200 kilometers, and going forward Railway intends to roll out the Kavach system to around 36,000 to 40,000 kilometers of rail route network in the next 4 to 5 years. And for the same, they are looking to engage with more private players. So BHEL is one important player, Keynes, Siemens, Lotus is another name. So these are a couple of important names which have shown interest. And if you see the rolling out of Kavach safety system, it costs somewhere around rupees 50 lakh per kilometer. So the quantum of this tender could be somewhere around like 5 to 10,000 crore. But yes, this is a very important project of Railways, and they are looking to accelerate it, to implement it across the rail route network, and in phase-wise manner they will be issuing the tender.
Right, okay, we leave it at that. That's some interesting info that my colleague is just picking up. But Mayuresh, just on the point of Railways and whether the meat of the rally is behind us, or would you say this is a long-term story, continue to add on declines?
Pullbacks would be a better way, yes. And there is a structural element behind this, Aisha. So if you're probably looking at the kind of orders that can come through from the Kavach system, from new lines that are expected to get introduced, railway infrastructure expected to get modernized, signaling systems. And therefore, I think the whole lot is expected to move in tandem, with a lot of orders moving in for the sector as a whole. Wagon makers, as an example, with more metro coaches expected to come through. So I think the entire ecosystem will see accelerated investments and a government push through as far as the capex needs are concerned. And structurally, I think more orders coming with very reasonable margins will mean that operating leverage will play out for a whole host of these players. So railways as a theme, defense as a theme, your shipbuilders as a theme will continue. Execution is going to be extremely important out here. For railways in particular, again, I think text macro rail on declines is something that investors can probably look at. Run up a little bit too much for comfort, but any pullbacks on this stock can definitely be considered to be put on your watch list as well. Again, I think HBL Power, with Kavach system getting introduced, one of the leading players as well as the private space is concerned, it has seen a huge price action over the last few quarters. But I think numbers have also justified to a large extent. Valuations are through the roof at this juncture, and therefore any significant pullback on a stock like this, with the assumptions of what the railway transformation is expected to be, can be something on the investors' radars.
So some of the railway stocks still look good, and of course the budget focus is also likely to be around that. But shifting focus to the kind of outcome that we have seen from the SEBI meeting yesterday, and there was some further freezing of the F&O norms and criteria as well. My colleague Ansh has worked around to get the details as to what those norms are and what could it mean for the possible inclusion and exclusions for the Nifty 50. Let me take it across to Ansh to get those details. Hi Ansh.
Right, so this announcement happened last evening, but the official circular will be released soon. So Nuvama has come up with a note on this. Let's discuss 3 key areas. And first would be timeline for new inclusions. A new stock inclusion can occur a few weeks after the actual circular comes in, and around 65 stocks meet this revised criteria as per Nuvama, but one must wait for the actual list. As per them, few potential additions could be Zomato, Yes Bank, Jio Financial, NHPC and Adani Green and much more. Now if you talk about other exclusion timelines, then stock that do not meet the criteria will be removed 3 months after the circular is issued. And after, as per Nuvama, there are 25 stocks eligible for removal. And these stocks could be Balrampur Chini, Canfin Homes, GNFC, Granules, Metropolis and many more. third and most important point is the method revision. So first here is median quarter sigma order size. Now the requirement has been increased from 25 lakh to 75 lakh. And this will ensure better liquidity and volatility in the market. Second is market-wide position limit, which has been increased from 500 crore to 1,500 crore. This will ensure that less stocks get into ban list and less frequently. Third is average daily value, which is set at 30 crore, which is up from 10 crore. This will ensure better liquidity and volume in F&O stocks. Now, fourth is performance-based stock exit framework, which is PSF. Though the clarity is not out yet, but more clear information will be out once SEBI issues circular on this.
Right, okay, new F&O eligibility norms, and it seems like many new names as well are being thrown up for those additions. In the meantime then, let's just take a status check on where the market is settling in at, because the last hour turned out to be a little bit of a choppy ride, but that's okay. You know, we're stepping into the weekend, closing in for the week, mildly soft, so we were unable to hold on, unfortunately, to that 2400 mark, which we started off above in today's trading session, and that was really being marked as one of the key levels. But Naresh, what's the sanctity of now 2400 getting breached, although not by a humongous margin, but still nonetheless a slip?
So nothing much. It's just a round figure, not a major resistance as such. The trend is positive. We could take a pause till the time we hold now 23,500. That becomes a new base, 52,000 on the bank Nifty. The bias remains positive. It could be a slow and steady move. We are not very overbought on any of the parameters as such. So looking at it as a case of you've had 3 good sessions, a little bit of a pause going forward, but the trend is still positive, expecting further upsides.
The latest coming in as far as Nifty is concerned, 24,000 is something which is broken for now, but let's see what really happens. But as we are talking about some of the technical factors, let's take the BTSC trades as well from our chartist. Chandan, what's the buy today, sell tomorrow idea, if any?
So I'll go with selective IT name, and in IT I'll focus on 2 stocks. One is the OFSS, Oracle Finance, and second is the persistent system. So I'll prefer to go with Oracle Finance. The stock has seen the open interest addition of around 10 to 12% during the day. Major trend is positive. A small follow-up can lead for the fresh breakout. Technically, it is all set for a pole and flag breakout. So recommending to buy with support of 9,700 and expecting a target towards 10,300 kind of level. So this will be the one name. And apart from that, I believe these companies, oil and gas companies or IGL, MGL could be in focus. So I can recommend the buy trade on IGL. Major trend is positive. It has given a breakout. So with support of 494, one can see an upside move towards 530. So Oracle Finance and IGL could be 2 preferred trade for my side on BTST.
What about your BTST ideas?
So first would be a buy on MGL. The stock has given a breakout into new all-time highs. Expecting a follow-up move going forward. Stop loss at 1580, target price of 1650. Second is a buy on Sun Pharma, trying to cross that 1525.30 resistance. Stop loss at 1510, target price of 1560.
I wanted to highlight one important news while I was talking about price hikes on telecom, tire, etc. There's some respite for people in Mumbai and Thane, and that's because the diesel prices and the tax on that has been kind of cut down a bit. It's reduced from 24% to 21%. I'm talking about the tax on diesel in the municipal areas of Mumbai, Thane and Navi Mumbai. The tax on petrol in similar areas has also been reduced from 26% to 25%. So there's definitely going to be some respite as far as the MMR region is concerned in terms of the prices of these petroleum products. And I think for quite a few people who are our viewers right here, this is an important news flow that you would want to track. But the other important news flow that you would want to track will happen over the weekend. Of course, it's the finals of the World Cup T20, which is right now underway in North America. Let me take it across to my colleague Karishma to get a sense as to what's exactly the equation like. Because yesterday, of course, India managed to beat England by 68 runs. So that was something that we were waiting by for, because the match started late. There was that rain worries also happening in. But in the meantime, let me take it across to Mayuresh. Mayuresh, you are a big follower of cricket, right? Have you been following this entire World Cup? What's the expectation come Friday? Will we come back on Monday with those India t-shirts happy?
No, Anisha, absolutely yes. I'm always an optimist, and the way the Indian team is playing at this juncture, obviously there are some complaints in the middle order as far as Shivam Dube's form is concerned, and what Kohli is probably doing at the top. But I think both of them will probably contribute significantly in the finals as well. And again, I think we don't have an ICC trophy for the 11 years, so I think it's high time that we bring a trophy back home. So I think I'm very confident the Indian boys will do it this time round.
Okay, so we'll wait by for that. Sunday evening is something to watch out for. But separately, what else is happening in the market? Okay, tomorrow evening, not Sunday. I stand corrected for that. So Saturday is the time, and you can perhaps take it time to take it slower Sunday, get up late and get into the crew, and not that you have to come to office on Monday morning. So that's something to watch out for. But other than that, in terms of the market mood, it's been a decent week, to be honest. Not much to complain. We have seen good amount of rally on the frontline index. Bank Nifty by the end of it is a bit wobbly. Mayuresh, what's the take as far as some of these NBFCs is concerned? Because there are these, dark clouds emerging with respect to, let's say, some loan waiver issues, some MFI issues that Ujjivan flagged out, plus certain, stress and the credit cost issues. What do you do with the NBFC names right now?
Anisha. So our take is that where the exposure of NBFCs is specifically in terms of unsecured personal agri loans, you'll probably just have to differentiate that a tad bit because there will be some provisions in terms of state waivers coming through on their balance sheets as well. But considering all factors at play, our take is that Shriram Finance is still something that can do well. The kind of exposure that the company has in terms of personal loans, unsecured loans, is very, very minuscule, around 3.5%, 4%. Very strong parentage, expectations of credit ratings remaining strong, capital adequacy remaining strong, and a very stable advances mix will probably hold this stock in good stead. So any pullback on this stock can be viewed as a good buying opportunity. And then I think banks selectively. I think you have to be a little bit more selective as far as banks are concerned. A large part of price action has happened as far as most large private sector banks are concerned. But our take is a mix of private and public both. So ICICI Bank on pullbacks is something that we continue holding in our global portfolios. State Bank of India from the larger names as far as the PSU names are concerned. And within the smaller names, Karur Vysya Bank is something that we continue liking at Markets with India and Bank of Maharashtra as well. So a diverse mix in terms of private and public, and Shriram Finance on the NBFC space of pullbacks is something that investors can look at.
Okay, that's a bunch of banks and, of course, Shriram Finance as well. Naresh, just very quickly before we wind up for the week, both a strategy for Nifty as well as Nifty Bank, looking at how the week and, of course, today has panned out.
So it would be a long on Bank Nifty at current levels, keep a stop loss below 52,200 and expect a recovery back towards 53,000 as such. So that's the view. On the Nifty, would wait for a little more dip for the risk reward to be better. But on the Bank Nifty, after today's dip, there is a risk reward to go long here.
Right, okay, that's the take coming in on both the Nifty as well as the Nifty Bank. In the meantime, Chandan, what's looking like a weak link right now? Any sector that you would say is a complete avoid?
So I can't say like that, but I believe selective sector could see some profit booking decline from higher levels because market has been consolidating. So I can look at name like Havells, Voltas, as monsoon is now there around the corner. So these stocks could see some sentiment sell-off. So Havells and Voltas could be two names. So looking at the price structure, most of these stocks are making multiple tops. So Havells one can sell with resistance at 1845. It can drip down towards 1750. Voltas may be other name. So I think these two name or this sector can underperform in the market in next week.
We let you go. Thank you so much for joining us today and have a nice weekend. But as we are looking at July, let me take it across to Snehi to get a sense as to what the historical trend for the month of July has been.
Let's talk about what the trend has looked like in July over the last 10 years and what we can roughly expect as we head into this month. Now, when we talk about Nifty, Nifty has shown a strong positive price seasonality in July, barring 2 years, which happened to be election years 2014 and 2019. The index has closed 9 times in the month of July in the last 10 Julys with an average return of 3.3%, and the only negative return was seen in election year 2019 with a negative return of 5.7%. This is on the Nifty front. Shifting focus focus, let's talk about how Nifty Midcap has performed historically. Nifty Midcap has exhibited strong seasonality barring both 2014 and 2019 election years. The Midcap index has closed in the green 8 out of 10 times in the last 10 Julys with an average return of 3.4%. Declines in the last years have been noted in 2014 and 2019. And remember, Nifty Midcap has outperformed Nifty 50 for 5 times in the previous 10 Julys. So that's what Nifty Midcap has performed like. Sectorally, now let's deep dive and take a look. Nifty Financial and MNC have closed in the green for 9 times out of the last 10 Julys.
And Snehi, also walk us through how the day has been and how we are closing in on the week.
Well, absolutely. So, rather flattish moves coming in on the Nifty as of now, struggling to just hold above that 24,000 mark is where Nifty is nominally above 24,000. But remember, we did open at 24,000 today for the first time, went as high as 24,100 on Nifty, and we've receded back from those levels. Sensex did see another record high as well. Both Nifty and Sensex saw their record highs for the 4th consecutive session today. Let's first talk about the broader markets, because that seemed to be bucking the trend today. Nifty Midcap has hit a record high. Smallcap also doing pretty well, outperforming the benchmark indices. Nifty Bank happens to be the index under the most pressure as of now. 1% lower is where Nifty Bank is at. Let's bring up some big buzzers today then. SAMHI and Polycab. SAMHI Hotels and Polycab on the back of the block deals we saw today. Let's take a look at how both of those stocks have ended. Star Health was up 5% on its analyst day. Man Industries has also ended the day with very good moves. Disman Carbogen on the back of its Switzerland units getting a clean sheet from US FDA. We are seeing very good moves coming in for that stock as well. JSW Infra and Navkar Corp that have been the talk of the street today in the morning on the back of that 70% acquisition. Both of those stocks seem to have ended in the green as well. A 3% uptick coming in for JSW Infra. Let's also pull up some gas stocks today. Mahanagar Gas and Indranagar Gas, MGL and IGL, both of them were in focus. Good moves coming in on IGL as well as MGL. MGL stellar moves, in fact 7% higher is where that stock is closed. Let's also take a look at what KPIT Tech has done, and very good moves coming for KPIT Tech as well. At the end of the day, almost 5% higher. Energy, Pharma, PSU Banks, Metal, Realty, FMCG, Auto, these are your indices in the green. On the flip side, you have media, financial services as well as Nifty Bank. Nifty Bank being under the most pressure. But well, yes, that's a wrap on closing trades today. Thanks so much for watching. Slightly around 24,000, 24,009 is where we've ended with the Nifty today.